Hey everyone, this is Mike Kramer of Mott Capital with a check-in. Today is September 13th. It's around 7 o'clock New York time. U.S. markets are closed. So tomorrow we're going to have the big ECB meeting. Expectations now are for a 65% chance for a rate hike. These odds have moved up over the last couple of days. Essentially, there was a story that was reported yesterday talking about the ECB's crucial 2024 projection to put inflation above 3%. There are some people who are speculating this was sort of a leak to prepare the market for a rate hike come on Thursday. So certainly you can see the move higher in these expectations over the last 3 days, going from around 32% to around 65%, like I said, for a 25 basis point rate hike. When we look a little deeper, beyond this would seem to be the last rate hike that the market is pricing in if they are to hike rates tomorrow. So this is important. This is potentially an important ECB meeting, and really what's more important is how they guide the market towards future policy meetings, because we can see that markets pricing in odds of rates coming down at the beginning of 2024. So this is going to be an important meeting, and really, oddly, despite the news coming out about the higher inflation forecast for 2024, the euro really oddly hasn't really responded at all. It's basically been in the same area it's been in now since September 6th. And you have to wonder what messaging the market is sending us about rate hikes and what we're really thinking about here. Because the way this has typically worked is that over the past year and a half, when inflation came in hot and expectations were for, one central bank to outraise another central bank, that typically resulted in that currency to strengthen. And oddly enough, we can see that there's been no increase really in the euro since, and the Fed is broadly not expected to be raising rates at this September meeting, although the odds are about 50% for another rate hike by the time we get to December. So there could be some messaging in here, and it's going to be important to pay attention to not only obviously what the ECB does and what they say, but really more importantly, how the euro responds to a rate hike if they should give one. Because clearly the euro's been in a downtrend now for some time. We've been talking now for several days about this important area of support in this 106.5 to 107 area. And the euro hasn't really been able to break down or break out in this case. And so one has to wonder that if we were to get a rate hike tomorrow and the euro were not to respond in a way that strengthens it, meaning we break above this trend line pretty firmly and start heading back up towards this 108 area, you have to begin to think that the messaging there is potentially that the euro and the market is beginning to think about, greater odds for recession coming, and that maybe the ECB has over tightened. And clearly a move down, a break of this minor uptrend around this 107.10 area certainly would be negative. It would certainly begin to lead towards a retest of this low at 106.80, and it would likely lead to a move lower and a test of the support level at 106.5. And again, this has been the real battleground for the euro, and I would think if we break this consolidation zone lower on what would be perceived as on a rate hike, which has been generally speaking bullish for a currency, if that were to happen, and the market would clearly be telling us that recession risk in the euro area is rising, and certainly the downside risk here seems pretty elevated, given that again we can see that the euro is no longer oversold. The RSI is still firmly trending lower. And so it's very clear here that there's consolidation taking place as well. So there's plenty of room for the euro to move down from here. So when we look at the DAX, the first thing that really jumps out is that there's a clear downtrend here. The other thing that jumps out is that there's like this head and shoulders type pattern here. And really the question becomes is, if you get a rate hike tomorrow out of the ECB and the currency market responds in a negative way, then that would potentially be a sign of recession. That would obviously be negative for the DAX. And we can see the DAX has done nothing essentially since, well, I mean, you can go back and say April. And when we look at this, clearly there's been a broadening wedge pattern. Clearly there's what looks to be a head and shoulders type pattern. There's also a neckline here at 15,600. So a break of this would clearly be a negative at 15,580. That would likely signal that there's further downside here, with the next immediate area of support around 15,460. Likewise, if we were to get a rate hike and you get a positive response out of the currency market, perhaps signaling that recession isn't going to come anytime soon, the obvious next area to see the DAX rally back to would be a retest of this trend line at 15,800, which also lines up with a level of resistance from prior highs right here around 15,840. So again, tomorrow is an important day. Obviously, the euro is going to be something that really needs to be focused on. And I think the DAX is going to be the secondary asset class here, likely to follow the direction of the euro currency. Anyway, that's all I have for you. Hope you have a great day. Bye.